All of the strong rhetoric has been based from the federal government on this. You know, the types of things up to 225% penalties and 5 years in jail.
Yeah, prison time.
Yeah, has been thrown on the wage subsidy. Don't gain the wage subsidy. And you just got to look at this from a pragmatic point of view. The wage subsidy, could be, $75,000 a month easy, right? For someone with a payroll of $100,000 a month. So it has the most meat on it for an auditor to chew on. If all you did was apply for $2,000 of CERB, they're not gonna send the dogs at you after you, because it's not a lot going on there. So I think the wage subsidy of all the programs, you better be very certain if you are eligible, and don't be gaming this program.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for tuning in for another episode of Ask Spurrell CPA. Today we are going to talk about the Canada Emergency Wage Subsidy. We're going to call it CEWS.
CEWS? I don't know. Something
As
like that.
the Edmonton business consultant, we're talking about Canada Emergency Wage Subsidy. Got Trevor from Inspired Method. Trevor,
Yeah.
are you enjoying our government handout series?
Oh my gosh. It's necessary because people need to try and understand what is happening with these government programs. The bad part of it is it's not as easy to understand on your own, so it's always good to have an expert CPA who can help you walk through that process, especially business owners and private individuals, and learning what the repercussions of each program is, so you understand it better and don't get in trouble.
So this is a meaty one. I apologize in advance. It's a meaty one. The quote that I'm going to use today is for the wage subsidy. Jim Collins' quote, one of our favorite books, Good to Great. And he said, yes, compensation and incentives are important, but for very different reasons. In good to great companies, the purpose of a compensation system should not be to get the right behaviors from the wrong people, but to get the right people on the bus in the first place and to keep them there.
Yeah.
And that's one of the things about this wage subsidy. So the statistic is 96% of all businesses fail. Now, running out of cash is number 2 on that, and not finding the right team is number 3. 2 of the top 3 reasons, right? And the wage subsidy, it has 2 purposes. So number 1, it provides extra cash. For some businesses right now, that's an absolute lifeline, okay? For other businesses, it's an opportunity to get some of the tax, the ridiculous amount of tax that you paid back in the first place. Don't feel bad about doing it. It's your tax dollars funding it back to you. So, and knowing that businesses fail for only, 3 main reasons, most of the time it's one of those 3 reasons. And one of those reasons is the inability to get and keep the right team. So even if it doesn't make sense on a spreadsheet in the short term to keep the people there, maybe you want to do it anyways for strategically, especially if you can do it for 25 cents on the dollar. So long as it's not going to cripple you for cash flow, it's a reasonable consideration. Should we do what we can to, put as much money as we can in the employees' pockets? So, Trevor, what are the questions that business owners should be asking when it comes to this wage subsidy?
Well, there's a number of questions that people might have about this, and I think you've gone through and you've been pretty exhaustive on the number of questions and the type of questions they should be asking.
Yes.
So number 1, which of the CERB, CEBA, or CEBA, CEWS, or CECRA have the most risk to the applicant?
So we'll go through them. The CERB is the $2,000 a month, right? The Canadian Emergency Response Benefit. The CEBA is the $40,000 loan, $10,000 of which is forgivable. The CEWS, the Canada Emergency Wage Subsidy, is the one we're talking about here today. That's the number 3, and then the newest one, CECRA, Canada Emergency Commercial Rent Assistance, coming up. Announced conceptually, but no hard details. I think the most risk, if you are an applicant for one of these programs, is regarding the wage subsidy.
Yeah.
All of the strong rhetoric has been based from the federal government on this. The types of things up to 225% penalties and 5 years in jail.
Yeah, prison time.
Yeah, has been thrown on the wage subsidy. Don't gain the wage subsidy. And you just got to look at this from a pragmatic point of view. The wage subsidy, could be, $75,000 a month easy, right? For someone with a payroll of $100,000 a month. So it has the most meat on it for an auditor to chew on. If all you did was apply for $2,000 of CERB, they're not gonna send the dogs at you after you, because it's not a lot going on there. So I think the wage subsidy of all the programs, you better be very certain if you are eligible, and don't be gaming this program.
Yeah, 100%. Now, should people apply for the wage subsidy without professional assistance?
I don't think so. No,
I don't think so either.
We went through it. Trevor was there as a non-CPA, was there in our internal workshop yesterday. And there are a lot of avenues on this. You better have really good records to understand if you qualify, who should be used, who should not be used. So if there is any program, I mean, the word of caution, the disclaimer on this video, I'm going to give you as much information as possible, but I think you're kind of crazy if you're doing the application on your own without professional assistance.
Yeah, get professional assistance or possibly jail.
Yes.
All right. So is there one wage subsidy for 10% and one for 75%?
That's right. Two separate wage subsidies. One that you'll qualify for up to 10% of the wages, a credit for 10% of the wages. Another one that's up to 75% of the wages.
Okay. Now, do you need to calculate the 10% subsidy to apply for the 75% subsidy?
Yes. Some people will say, well, I qualify for the 75, so I'm just going to go with that one, and it's easier and I don't have to calculate it. But one of the questions in the 75% wage subsidy is how much do you qualify for the 10% wage subsidy, and that is automatically deducted from the 75%. So you can't opt out just in simplicity to get your 75% from one source. You have to get 10% from one source and the other 65% from the other source. So you actually have to go through the method of calculating the benefit for the 10% wage subsidy, because it's a field on the form that you're going to have to use to apply for the 75%.
So right there, most people would fail.
Yes.
At that spot right there. Now, the next question. As the 10% subsidy reduces remittances, does this provide more immediate relief?
Yeah. So the 10% wage subsidy, you're not waiting for it to fund. You just simply send in less payroll remittances than you would otherwise send in. So if you haven't already, you can deduct it off of future payroll remittances. So it's like an immediate cash relief. You're just basically saying, do I self-qualify? They've identified there might be some paperwork in the future. I'm sure there will, especially on the T4 summary at the end of the year when you file the T4s. But for right now, it's just, do I qualify? If so, send them less RP money. So it's effective, immediate cash flow. It's immediately helping your cash flow.
Yeah, not waiting for something to come into your account.
Yes.
So now, can we be certain when the 75% wage subsidy will fund?
No. I mean, they haven't even really given a timeline. And really, the Liberal government has shown, very, a loose attention to their own timelines anyways. So, we can't be certain when this is going to fund. So, we apply for it. It's coming some point. I don't know, in a day or in a year. I'm not sure, but it's coming. Yeah.
Well, that has other problems associated with it, because the person has to pay those wages in hopes that they get the 75%.
Yes.
Right?
Yeah.
So, next question is, do businesses have to justify a 30% loss in revenue to qualify for the 10% subsidy?
The 10% subsidy is just thanks for still being in business. If you're paying people, you automatically qualify for the 10% wage subsidy. There's no revenue qualification portion of that. If you're a qualifying entity, for the most part, the small businesses of this channel who are incorporated and have a regular payroll account and have been running it for, since before March, like they're good to go. The 10% wage subsidy is it's there for them. No revenue qualification. You could be doing more business this month. You still qualify. Okay,
well that's good news. Next question is, what are the $1,375 per employee and the $25,000 per employer limits for the 10%?
So those are like the hard limits. So you can't get more than $1,375 back for one employee. So you got someone on your payroll making $200,000 a year. You can't get you can't get more than $1,375 back for that one person. You can't get more than $25,000 back as an entity. So those are just hard limits on the 10% wage subsidy. So it's not a huge program. I mean, it's $25,000 at most, and you'd have to have a whack of employees to get that. So 18 or something, I think. So
okay. Now, do most qualify for the 10% subsidy for wages paid March 18th to June 19th, 2020?
Yeah, it's not stringent. It's not a revenue test. It's pretty much, if you had a payroll before all this went down and you're paying out wages from March 18th to June 19th, 2020, 10% back up to the limits of $1,375 per person and $25,000 per entity.
Okay, now what percentages of revenue decline allow you to get 75% wage subsidy?
So there's 2 percentages. So you got to be down 15% in March and 30% in April and May to start looking at the 75% wage subsidy.
Okay.
So you got to be down. The qualification is a little bit lower for March because the assumption was that a lot of businesses didn't really start to shut down until mid-March. So they're saying if you're down 15% in March, you can look at qualifying for the 75%, and you're going to be down 30% in April and May.
Okay. Now, next question, Josh, is what are the available reference periods for demonstrating the loss of revenue?
Well, they changed since my last video, so I don't know.
Fantastic.
Some of our clients must have pushed it out to some MPs, and some people in the Liberal government, maybe they realized that it was ridiculous, their last one. So previously, it was just month over month. So you had to compare March of 2020 to March 2019. You had to compare April of 2020 to April of 2019 and May of 2020 to May of 2019, which really excludes anybody who's grown their business in that period of time.
Right.
But now they've given you an alternative. So you can still use that as originally planned, but you can also choose to use the average of January and February. So think of a business going up and up and up since March of last year until January they hit a level. And now you can use the average of January and February and compare the average of January and February to March, the average of January and February 2020 to April, the average of January and February 2020 to May of 2020. So, but once you lock into one of those, you can't choose to use year over year 1 month and the average of January and February. Once you're locked into one stream, you're locked into one stream, so you got to pick which one.
Makes sense. So, if you qualify for 1 month, do you automatically qualify for the next month?
Yes. So, even if you were only down 15% in March, and let's say you're up in April, or you're only down by 10% in April, you automatically qualify for April. So, any month that you qualify, you automatically qualify for the next month. So it gives you a little bit of certainty in determining, certainty in determining if you should have kept people on, even though that period's almost done anyway. So, I mean, that was, in spirit, it was good if it was released, a month and a half ago maybe. But now at this point, that was the idea, is that you kind of, have a little bit of lead up on knowing that your numbers trail a little bit.
Okay. Now, why are March 15th, April 11th, May 9th, and June 6th important dates for the 75% subsidy?
So these are the payout dates. So the reference period is different than the actual payroll dates, okay? So if you qualify in March, so either using the year over year or the average in January and February to March, it's not the wages paid in March that's 75%. It's the wages paid from March 15th to April 11th. That are 75%. And if you qualify, so it's staggered a little bit. So the month is here, and it's like half of those month's wages and half of next month's wages, right? And then similar, if you qualify in April, so if your April revenue is down 30% versus the reference period year over year, the average January and February, then the wages that you pay out from April 12th to May 9th are reduced, right? So remember, the payout period is slightly after the reference period. So the reference period is the calendar month, and the payout period is kind of half of that calendar month plus half of the next one, roughly, right? But those dates are important. So March 15th is the start date, April 11th is the next cutoff, May 9th is the next one, and June 6th is the last one.
Not confusing at all, folks.
Yeah.
Not confusing at all. Okay, next question. Do these dates line up with the first 3 periods of the CERB program?
Yes, at least they've thought of that, because these programs intertwine, so they do line up. If you're looking at the CERB periods, March 15th to April 11th, that's the first period in the CERB, and then April 11th to May 9th, the second period, and then May 10th to June 6th is the third period in CERB. Keep in mind, CERB goes to period 4. Wage subsidy only has 3 periods, right? So 4 periods announced for CERB so far, only 3 periods announced for wage subsidy, but the first 3 periods line up in both programs. So we've got some consistency there.
Okay. Next question. If you get a 75% subsidy for someone, can they keep their CERB from that period?
No. So they've said if you apply for the wage subsidy for an employee, that employee will be required to pay back their CERB. And at some point, it's not even clear, maybe the employer would have to pay back the wage subsidy. I don't think they're going to administer it that way, but it's pretty much if you as an employer apply for that wage subsidy for an employee and you get it, and that employee has also gotten CERB, that employee might have to pay back their CERB. You can't double dip.
Yeah. So that's really the onus is on the employee to be forthcoming with that information if they've applied for CERB, and then you're also applying for that 75%. So, I mean, it's the onus is on them, I think, to be 100% certain that they're not going to screw you over. So why is CERB better for the employee if they'll get less than $2,000 in the period?
Well, CERB by nature is $2,000. So if they're going to get less than $2,000 on the wage subsidy, why is the wage subsidy beneficial for the employee? I mean, there's a lot of people who are working part-time hours or the hourly rate is not that high, where CERB was actually a raise for them. Yeah. So in which case, applying for the wage subsidy for that person, you're actually putting them in less of a of an economic situation, right? So if your idea is to keep these people, maybe you should think twice about doing that. You can make the application without their permission. But they'll have to pay back that $2,000. So here you go. Here's your $1,000 wage subsidy. Oh, by the way, CERB is going to call you and ask for the $2,000 back. Not a great situation to be in for the employee.
Not a great situation. And the other bad situation that we haven't really talked about and is not the topic of this discussion is a lot of people are being paid just to stay home.
Yes.
But that's another story.
Story for another day. Maybe it's a little difficult to staff these. It's a really serious issue, too. Yeah. We're making light of the math because the math is silly, but the effect is not. I mean, they're trying to staff these care home facilities when the people who are working in them are getting more to stay at home. And there's some people really suffering in these care facilities because they can't get people to work. Well, guess what? They're getting paid more to stay at home.
Yeah. Okay. That's our little political rant. Next question. Can an employee be without pay for 14 or more days in a period and qualify?
No. So those periods, those wage subsidy periods are 28 days in length, and they can't be without pay for more than 14 days. So most people are there on a bi-weekly pay schedule. You can't have skipped one bi-weekly check and did the next one and get 75% of the second bi-weekly paycheck in that period. And theoretically, they had to have been on the payroll the whole time. So I think they've been getting their regular checks at their regular scheduled dates. They can't be without pay for 14 days or more.
Yeah, and that just makes sense because if there's no pay going out, there's no subsidy that's required.
Yeah,
right.
It's kind of thwarting the employers on applying for the people making less than $2,000. But it's not concrete, right? Because you could have just got 2 small checks in 14 days, and theoretically the employer could still do it, and that wouldn't be in the employee's best interest. But it is starting to get into that realm where it's at least giving some guidance on how to handle that issue.
Yeah. Now, can you back pay an employee to qualify?
Yes, you can. You could back pay them. So let's say you brought them back on for the second half knowing that this program was coming out, but you haven't paid the first paycheck. You could go back and back pay, and that's okay. You can make that back payment, yes.
Okay. Now, is the 75% subsidy limited to $847 per employee per week in all cases?
Yes. So no matter how you're crunching that math, if you're looking at those calculations, if you're getting more than $847 per week per an employee, you're doing it wrong. That is the limit. It's $847. Trust me, you can't get more than $847 per week per employee. That's the cap, no matter how you work those formulas.
And it says so right on the application.
Yes.
Yeah. Okay, so the next question that we have here is, there we go. Can the greater of 75% of actual wages or 75% of baseline remuneration be used?
Yeah, so there's like 2 formulas. They're a little bit complex. You have to go through them, but it's pretty much going to work out that it's either the greater of 75% of what you're actually paying them out in those pay periods. So you're paying them, you're paying them $100 and you're getting back $75, right? Or it's 75% of their baseline wages, what they were making before. So it's the greater of those two generally. That's pretty much how this program works out when you try to really simplify those formulas.
Okay. But yesterday it was not very simple when we were going through it. I was just scratching my head going,
Yes.
just get help. Just
Yes.
get somebody to do it. Which is why we hired you in the first place.
Yes.
Okay. So the next question is baseline remuneration calculated by looking at wages from January 1st to March 15th?
Yes. So if you're having that baseline wage discussion, so remember it's the greater of what you're actually paying them during the wage subsidy period, or what the baseline remuneration was, and the baseline remuneration is calculated by looking at what happened from January 1st to March 15th for a particular employee. And keeping in mind, if they didn't work for like 7 continuous days, you can back that period out. So you can reduce the number of weeks by that.
Okay. Now, do you have to pay out 100% of the wage subsidy?
Yes, do not try to claim the wage subsidy back and don't pay employees. Like that is, that's bad news.
Yeah.
That's how you start looking at the, 225% penalty on the amount and the jail time. That's not what it's for at all, right? I mean, making a calculation error could be very costly. Taking the money and not paying it to people is very difficult to explain.
Very difficult. I didn't know. Yeah, that's not going to buy any time here. So the next question, is the employer required to top up the remaining 25% of
No.
the wage subsidy?
No, if they're just sitting at home and you're looking at what they were making before, the baseline, and you just pay out 75% of what they're making before, you're not required to top it up. They encourage you to make best efforts, right? And it's going to might be difficult in some circumstances to actually get them to show up to work if you don't want to pay them 100%. But if you just want to take advantage of the 75% to be a nice guy to your employees and you don't want them to come in, you're not required to top up that 25% if you can't do it.
Okay. Now, can 100% of employer CPP and EI amounts be recovered for employees on leave?
Yes, if they're on leave. So if they're the type of employee that you're basically just paying them to stay home. So you're getting you want this to be of no cost to you. You can get the 75% of what you were paying them before, up to a maximum of $847, and then the CPP, the employer CPP and EI that would normally be on top of that, 100% of that is covered. So that won't incur an extra cost for you.
Okay. So effectively, you can pay 75% of wages at no cost to the employer.
Yes. You could effectively, the math would work out that if all you're doing is giving them 75% and they're at home, it has to be on leave. You don't get the 100% of the CPP and EI unless that employee's on leave. So I would suggest it's hard to get the employee to come in. There's some labor standards issues if you're trying to get them to come in at 75% of their wages, right? But if all you want to do is just pay them 75% of what you were paying them before to stay home, you could do that at no cost to the business.
Okay. The next question is, how does this become complicated if the employer does not have any cash?
So technically speaking, you're supposed to have paid the wages out and then recover them later. So it's of no cost to the employer, but it assumes they actually have $10,000, $50,000, $100,000, $200,000 to run the payroll, send the funds, and then wait for the CRA or Mr. Trudeau to take a sweet time to send you the money back. So it can get a little complicated, although it should be of no cost. It's a significant cash flow burden, and it might be an absolute impossible situation for some businesses.
Yeah, and not to mention, they announced this program probably over a month ago, and now they finally have the details.
Yes.
It's been a long time.
Yes.
Because people are talking about this right when we first shut down this
Yes.
75% wage subsidy. And now they're finally come up with the rules, but what's happened in the meantime? That's pretty crazy. Next question is, why are non-arm's length employees required to use baseline remuneration?
So think non-arm's length employees, the owner, their family members, the other shareholders, those are non-arm's length employees, and they don't just want you to say, voila, I've never been an employee before, give me my 75% of my wages, right? So basically the non-arm's length employees, you have to consider the baseline remuneration. It can't be more than 75% of what you were doing before. Where the arm's length people, it's the greater of what you're actually paying them and what their baseline was. The non-arm's length employees, it's basically you're forced back into, if you really dive through the math on that formula, you're forced back into the baseline remuneration.
Okay. Next question is, do a lot of non-arm's length employees declare salary only at year end?
Yeah. So a lot of business owners are taking shareholder loans out of the corporation, solid tax planning, and then they're waiting to year end to see what mixture of salary and dividends is going to be the cheapest for them, and they declare it at year end, and they've been doing that for a year, 5 years, 10 years, right? So to say now that I was doing this regularly and I got salary from the period from January to March 15th might not be ideal.
Yeah. Is the total per person benefit for the 12 weeks approximately $10,000?
Yeah. So let's say they pay out $847 for the 12 weeks. I think it's $10,164 or something like that. It's roughly. It's worth about $10,000. At the end of the day, that's what the government is going to give you for 12 weeks.
All right. Do owners need a T4 of at least $23,000 from January 1 to June 6th to qualify?
Yeah, so even if you're going to go down this path as a business owner, you would need a T4 of at least $23,000 because you had to have had a payroll in the baseline period from January to March, and then you have to have the other period from the period of the actual program, the 12 weeks of the actual program. So that T4 for the owner has to be at least $23,000 at that point. So you better not just be filing a T4 for the owner for the $10,000 at the end, right? Or just for the baseline period. That's not how it works. The T4 is going to be, no matter how you cut the math, it has to be at least $23,000.
Yeah, and guys, don't try and do this on your own and try and think you're pulling a fast one. Get professional help from a CPA. Next question, Josh, is will that salary trigger approximately for $2,300 in employer-employee CPP?
Yeah, so if you're the business owner, this wasn't a free program. So you opt into this program, you're also opting into CPP. You have to have triggered, CPP, right? And I don't think you're going to make the argument that you were the employee on leave as the business owner. You're going to get some of that covered. But even if you get some of that covered, you're not getting the baseline period covered. So let's say $23,000 T4, it's going to cost you around $2,300 in CPP. So you have a cost of opting into this thing to try to get your $10,000. Try to get your $10,000, you're probably at least paying $2,300 in CPP.
Okay. Now, taking into account the CPP could cost the owner potentially get more with CERB.
Yeah, I mean, CERB is 4 months at $2,000 a month. So that's $8,000. So if we take the CERB at $8,000 and we take the wage subsidy at 10 and we're saying, hey, you're going to get 10, but I'm going to lose $2,300 to CPP, now we're at $7,300. The CERB is actually bigger. So there's some situations out there where even if you can navigate the complexities of it, you might have got more through CERB as a business owner.
Now, could the wage subsidy application potentially conflict with the CEBA application?
Yeah, like what if your position for the CEBA application is that you do declare lump sum salary at the end of the year, and you've made that declaration of say $20,000 at the end of last year. Now all of a sudden you're trying to make the argument simultaneously that you are also on periodic payroll from January to March. Like it starts to get sticky, right?
Yeah.
And your positions start to conflict, right? So I'm not sure the wage subsidy is a great solution for a lot of business owners. It's not impossible. I mean, you can get it, but it's not the silver bullet that you might be thinking it is. It might be a better solution for your arm's length employees, and proceed very cautiously for doing it for the employer, the non-arm's length, the person who actually owns the company and their family. A lot of times CERB might be quicker and easier and even pay out more.
Yeah, and it's a simpler program and probably more beneficial for a lot of the small businesses we're talking about.
Yes.
Now, would you recommend owners retroactively change their remuneration strategy?
I don't think so. Man. Like, I wouldn't be trying to game this one to try to get the penalties are significant, right? And if you're not making any money, I mean, the CERB is just sitting there $2,000 a month anyways, right? So if you're not actually making a net income, what's wrong with that? But I would really only be looking at it if you were legitimately paying yourself a salary. consistently as a business owner. If not, I think there's a lot of hurdles, and I wouldn't be trying to do any retroactive tax planning to get it. I think it's just too risky.
Yeah, and these programs are made as a stopgap to try and help businesses through this time. It's not a money-making scenario for any business. Like, you're not going to get rich on any of these government programs. Name me one program where any person has benefited greatly from a government subsidy.
Yeah.
It doesn't exist. So guys, be smart, be wise about what you're doing, and get help from a professional CPA like Spurrell and Associates, Chartered Professional Accountants.
Right on. Thanks very much, guys. And, we hope to talk to you again soon. We'll probably have, maybe we'll do a little bit of update on the CERB program. We're going to do another video on the CEBA program. Yeah. Once we see some more loan applications processed and understand some more of the what goes right, what goes wrong under them. We've seen some fund already. And then, the rent, the rent subsidy, that's going to be a big one. That there's only high-level details from the podium release. There's no real technical specifications yet, so that's forthcoming. So look forward to it. Thanks very much.